Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
I have a question. Actually, two different attendees are asking it.
Okay.
Different sentences, but essentially, Leo wants to know, how do these patterns interact with other events, such as government printing money? And then we have Tom says almost the same thing. How do you account for the effect of news, policy, and other events in driving price patterns? I get this question all the time also. You know, people say, oh, all this stuff is happening. Why should I care about the charts? I think you're going to give the answer in a brief second. Why?
Yeah, I really don't care what the news is. Honestly, I don't follow the news at all. The only thing that I do pay attention to is the fact that I know the times when major news releases come out, because often these can lead to sharp price moves. I find that when you're dealing with Forex type of stuff, the exchange opens and exchange closes have probably the biggest impact in shifting direction. When you're looking at the Forex market, correction periods are one of the things that I do cover in the course. And when you're looking at the Forex market, a lot of times the reversals and corrections take place on the hour. So like 3 o'clock in the morning Eastern, for instance, is one of the best times that I'm looking for reversal patterns. And 1700, 2200, 2300, all at 700. Those are, 700 in the morning. Those are all really good times to see reversals take place. I kind of think that, you know, for the most part, everybody knows when news is coming out. Everybody has a decent idea, usually, what to expect from the news. So unless there's something like really extremely unexpected, there's usually a lead into it in terms of like how momentum is acting. It's really quite rare that the reaction to a news event will be surprising given the pace action heading into the news event. Meaning, for instance, let's say, you know, something is heading higher into like a Fed announcement. We saw the same thing happen a week or two ago, where we had the market trending higher into the FOMC meeting. And it was a steady, gradual, paced move, but it continued into that news itself. So the news helped create, nobody expected any change in, the actual interest rates. So when the news was announced that no change occurred, we saw a very rapid drop, rapid bounce back, creating that V pattern, which ultimately led to a breakdown, continuation of the breakdown. So sometimes, you know, even if you're not sure on what the news is going to bring, you can still use the momentum to play the reactions of those moves. So, you know, usually there's a little bit of a heads-up, good idea, but you can always play the momentum shifts following the news itself, too.
That's interesting. Hey, Toni, getting a couple questions about how to order. A couple people I think they almost want to do it immediately, and they want phone numbers. Or is it, do you have to go to swingtrader.net?
Yeah, you just go to swingtrader.net. I'm not going to get the price changed until I get back to Florida, so it's probably going to be this weekend, and I'll send an email out to my entire list too. But you know, if you pick it up earlier, you'll get. It's usually about 3 business days is about the average delivery for within the continental United States and Canada. It tends to be about 5 days for overseas.
Okay,
it's really extensive too. I mean, it's 7 hours. It's 7 hours for the initial course. There's a 238-page textbook, which was actually 550 pages, but I didn't want to pay all the printing stuff, so it kind of got squished up into 238. And I have a recording of a presentation I gave in Denver. It goes more specifically into a particular pattern that I love to trade, as well as covering a lot of the basics, and that's another 3 hours and another 100 pages. I also have a market timing guide that basically it looks at my favorite price patterns, things like, bull flags and head and shoulders, but it tells you the building blocks or the components to look for that are pros and cons within those patterns, and how to use those to tell you, what your odds are. And it gives examples that list both the pros and cons for all of the trades they're given as examples. And I actually expanded the version, so those that have ordered the course in the past month, I've emailed them an expanded version, or for those of you that maybe ordered, this last week, I haven't quite got it out to you yet, but it's, I think, like 120 pages thereabouts, so it has twice the examples of the original. So that's all that's in this course. I've gotten a lot of harassment from people in the industry because I'm undercharging it, they say. So I'm going to redo it and up it. But yeah, it's a really good course. I've never really gotten bad feedback. So most people, they're just like, I wanted to hear more. So if you have any questions, though, just be sure to email me. I'm happy to answer you. Usually about once every 6 months or so, I also do a live audio-visual Q&A session that I'll take questions and answer everybody that purchased anything that I've ever done, too. So everybody can sit in those.
That's great. Toni, I don't want to take too much of your time. Let's take 2 or 3 more questions, if that's okay.
Yeah, I actually have to take off here in about 10 minutes to grab my kids, so
okay,
I got a couple more questions I can answer. The swing trading question, somebody asked, what charts or what time frames do I suggest for swing trading? I always focus on the daily chart just as my primary, but I will never take a swing trade if the weekly trade is not also in my favor, because if it's not in my favor, if there's like larger support or resistance levels, or the momentum is all wrong on a larger time frame, it doesn't make any sense to take it. There's a higher risk of it failing. So I always do that, and then I'll look at the intraday for helping time the moves. I think a lot of people think that you can get away swing trading if you have a full-time job, but really you should back up and look at patterns that have formed over a couple of weeks. I mean, maybe they're like 10 to 15 day formation or something, as opposed to like a 3 or a 4 day, because that way you can get away with not having to use the intraday to get ability. So definitely try that.
Toni, I see a great question from Jason. He says that he sees that, again, he's looking at it from the Australian dollar, U.S. dollar. We at the IAC look at it the other way, AUX being the U.S. dollar being the base currency. But anyway, he says that he sees the Australian over the U.S. dollar forming a weekly W, which I guess would be an M looking at the IAC AUX. But is it right swing, which has not broken the low? Do you trade this sort of formation also?
Let's see. I don't have my charting platform open. Hold on just a second.
I mean, it's definitely been consolidating at that very, from the IAC perspective, from that very high, that lofty level, from the U.S. dollars perspective. I guess if you look at the opposite way, it's from a very low level.
Okay.
That's the,
your option pair is AU, or well, I guess not pair, but it's AUX for those of you that are looking at
right.
the one online for them. Okay, hold on. Let's see here.
Because I guess he's thinking that's an M now, because it was a W from the reverse standpoint.
What time frame are we looking at?
Weekly, he says.
Okay. Let me pull that up and show you guys here.
Okay.
Oops. Find my conference page.
I promise you, Toni, about 3 or 4 minutes, I know you have to go, so.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.isc.com/podcasts.